Multifamily Mindset
podcast. Think bigger.
Hey everyone, welcome back to another episode of the Multifamily Minute. Glad to have you here. I'm your host, Kyle Brown, and here to break down the ins and outs of multifamily investing so you can absolutely crush it in this MF business. Now today, we're going to dive into an absolutely crucial topic, loan types. How do you pick the right one? What investment strategy we're using, right? These are just questions that, come up all the time. What loan type should I be looking for? And whether you're fixing up a property to increase the rents or looking to hold it long term, understanding loan options is key to maximizing your returns. So let's just jump right into it because there are tons of different loan options that you can look into. First up, we'll start with our bread and butter, agency loans. They're backed by Fannie Mae and Freddie Mac, and these are gold standard for stabilized properties. And why? Because they offer competitive interest rates, long amortization periods, so think your loan is amortized over a 30-year period, and they're higher leverage, sometimes up to 80% loan to value. But here's the thing, they're not great for properties needing for heavy renovations or those with high vacancy rates. If your property isn't already cash flowing or hitting certain occupancy thresholds, think like 85 to 90% is normally the requirement, agency loans might not be an option. Bottom line for these is that they're perfect for properties that already are humming along, but it could use light operational tweaks to increase income. The next, we can go into bridge loans, which will help you with some of those types of properties that don't quite hit that agency loan that you're looking for. Bridge loans look like as the Swiss Army knife of multifamily investing, because these are short-term loans that are designed for properties that need some TLC before they can stabilize. So you can think of the bridge loans as your financing solution when you're buying a property that is underperforming, needs renovations, or has a high vacancy rate. Bridge loans typically come with a higher interest rate though. So yes, you're going to be paying a premium. It's not all sunshine and rainbows out there, folks. I'm sorry to tell you, but they're incredibly flexible. So similar to construction loan for like a business plan, most of them have a 1 to 3 year term. And that gives you the runway to implement your upgrades, reposition the property. And then once that's done, you can refinance into a more permanent loan, like an agency loan, to lock in lower rates and long-term stability. So if you did find a property that you wanted to get a loan on, but say it was at around 80% occupancy right now, and that came from some downed units, well, guess what? Bridge loans can potentially help you in raising that CapEx, so that is less money up front that you have to bring in from your investors. And then you're also able to qualify for a loan that didn't originally meet that agency debt requirement. So very flexible, very great to use, but can be dangerous considering their high interest rates. Now, bank loans, these are another one we can look at. These are offered by local or regional banks, and they can be a solid option, especially if you have an existing relationship with the bank. Bank loans are flexible, and it makes them a good fit, but for smaller properties or really unique situations. There is a trade-off, though, so don't get too excited. They come with stricter recourse terms, and means that you might have to personally guarantee the loan. They also tend to have a shorter amortization period, so 20 or 25 years, and yeah, it might not sound bad if you're not familiar with the loans, but it just means that you're going to have higher monthly payments, so your property's got to be bringing in some more income. And if you're looking for a customized approach, like financing for a mixed-use property, then bank loans might be the way to go. Now, we can move on to CMBS loans. For those of you guys who don't know, those are commercial mortgage-backed securities. These are an absolutely different beast. They're non-recourse loans, which is a huge plus because your personal assets aren't on the line, but CMBS loans are pooled with other loans, securitized, and then it's sold to investors. So here's the catch. They're not flexible. Prepayment penalties can be steep, and you're locked into the terms of the loan. CMBS loans are ideal for properties that are stabilized and cash flowing, but if you need to pivot your business plan down the road, they might not give you the wiggle room that you'd want. And last, but definitely not least, we have HUD/FHA loans. So these are great because they're backed by the government. They offer amazing perks. They're super low interest rates and long amortization periods, and sometimes up to 35 years. They're perfect for long-term holds and properties that serve as workforce housing. But, and it is a big but, you and I both know it was coming. These loans come with notoriously complex and time-consuming application processes. So think when you're applying for a loan, you're normally thinking, okay, maybe a couple of weeks to get that. This is more like months. So they're great, but they're best for investors who have patience and are in it for the long haul. But there you have it. That's a quick breakdown of some major loan types that people will use in multifamily investing. Now remember, each loan, they serve a different purpose. So choosing the right one depends on your strategy, property type, and your business plan. If you're working on a value add deal and aren't sure which loan fits your goals, well, feel free to go and connect with somebody within our network. Feel free to reach out to me. Share your thoughts, drop a DM, shoot me an email. And if you found this episode helpful, please do not forget to subscribe and leave a review. It helps more investors like you find this podcast, and we want to be able to reach out and help as many people as we possibly can. But until next time, keep pushing, keep learning, and keep making moves in this multifamily business. I'll catch you guys on the next episode of the Multifamily Minute. Peace.
Multifamily Mindset.
Podcast. Think bigger.